When it comes to running your credit, there are two different types of credit inquiries. One can lower your score and the other will not. Stick around because today we're going to be covering the difference between a hard credit inquiry and a soft credit inquiry. More on that starting now. The credit inquiry that's most familiar to you is probably a hard credit inquiry, otherwise known as a hard pull. This involves giving up your credit info as part of a loan application process, such as a car loan, mortgage application, student loan, personal loan, or even applying for a credit card. These inquiries occur when a lending institution is trying to determine whether or not you are approved and what the particulars of that loan will be. A hard inquiry must be authorized by you and will be documented on your credit history. It may also lower your credit score by a few points, but don't worry. In the scheme of things, it's inconsequential to your credit score. Not to mention, it's only temporary. Now, that doesn't mean you should go applying for a ton of credit cards over a short period of time either. The more hard inquiries you have, the riskier you appear to a bank because it looks like you could be ready to take on a ton of debt. Hard inquiries involving car loans, mortgages, and student loans, however, do affect your credit score differently than other loan applications like applying for a credit card. If you're interested in learning more about that and the other intricacies of running your credit and its effect on your credit score, check out our other video. On the other hand, soft credit inquiries known as soft pulls have no effect on your credit score whatsoever. This is because soft inquiries aren't attached to a specific application for credit. For example, if you checked your own credit score, or a current creditor you work with runs your credit for a pre-approval, this would be considered a soft inquiry. You may see this when you get letters in the mail regarding pre-approvals for credit cards or car loans up to a specific amount. This is because creditors run soft pulls to determine your credit score and to decide whether to send you an offer or not. A soft inquiry can also be done when an employer runs a background check, or even if you're trying to rent an apartment. Soft inquiries aren't an indicator of greater risk to lending institutions, therefore will not affect your credit score. Overall, hard credit inquiries will affect your score and soft credit inquiries will not. Although a hard inquiry will only minimally affect your score, it's still important to remember not to continuously submit applications month in and month out, as it may make you look more risky to a bank. Nevertheless, the purpose of this video isn't to make you fearful of a hard inquiry, just to make sure you're informed of what a hard inquiry is and does to your credit so you feel comfortable when the time comes for you to submit your credit application. I hope this video was helpful, and as always, thanks so much for watching. If you'd like to support the channel, please subscribe and hit the notification bell so you can stay up to date with all of our weekly content. I hope to see you in the next video. Until then, I'm Matt Blatt, and I'll talk to you soon.